Happy Wednesday, everybody. I hope you've had a good trading day. My name is Lee Goss, and I'm with International Futures Group, EFG Group, here in Chicago. And I want to talk to you today about a trading strategy you might find useful. Now, if you were fortunate enough to get yesterday's edition of The Edge, and I hope you are getting it, you will remember, or you'll recall that I mentioned 4 commodities that were approaching or could approach the critical battleground price levels. Now, the battleground price or prices are prices needed to reverse the present long-term trend according to my model. Now, the LAWG 647 model is something that I use, and I base all my comments and recommendations off the model, the 647 model, as I've mentioned. Now, the model suggests that of the 4 commodities that I mentioned yesterday, December bonds might hold the best potential of the 4. So what does the model tell us, and what might we do? Well, December bonds right now are in an uptrend. And if we have a close tomorrow, or excuse me, Friday, at or below 139.07, the trend in December bonds will turn into a downtrend according to the model. Now, what I'm going to look to do is to see if December bonds violate the 140.06 level, and then I'm going to look for values to buy. And here's why. If you take a look at the other prices that are listed here, should the December bonds fail to turn negative Friday the 7th, the price that it would take to turn negative on the 14th, 1 week later, is 137.30. And should they fail to turn bearish on the 14th, the price needed to turn bearish on the Friday close, the 21st, is at or below 135.27. And as you can see, each week it's getting further and further away from the trend turning levels. It's going to become harder, or like I like to say, it's running away from a trend change. It isn't until the 28th of November that we see an uptick in the prices, meaning it's getting closer to present levels at 136.19. Now, it doesn't mean that I'm not trying to give you the impression it can't turn negative or that it won't turn negative. What I do want to say, it is my opinion that the odds suggest, because the prices are running away from trend turning values for the next 3 Fridays or the next 3 weeks, the odds suggest it is highly unlikely that December bonds will go into a downtrend. Now, that's my opinion because of these prices and the odds that I feel it suggests. Okay? So, what I'll be looking at doing, again, is if I can see December bonds violate 140.06 late Thursday or Friday, I will be looking for values to buy. Where should I buy them? It depends on your risk-taking ability. The more risk-taking ability you have, the closer to 140.06 you can buy it, and the further away from 139.07. If you don't have as much risk-taking ability, you want to try to get it closer to 139.07. And the nice thing about this, you know that on Friday, if you buy it and it closes at 139.07 or lower, you get out. So you already know where your stop should be. So having said that, that is the plan that I will use going into late Thursday or into Friday's trade. I will buy it, look for values to buy underneath 140.06, look at this price level as my stop, and look for the December bond futures to give us either a sideways upward movement or a definite upward movement, given the fact that prices are going to make it more difficult to turn negative in the near future. Having said that, trading futures is risky. Let's make no mistake about that. So you better put on your big boy jock, your big girl sports bra if you're going to trade futures, because futures trading is risky. This is Lee Goss at WGAUS signing off again. Happy trading, and look to see you next week. Have a great one.